Welcome back. One of the big topics that we want to touch upon is this increasing buzz that we've been hearing right from the top officials in the government, starting from the finance minister, about including petrol and diesel into the GST regime. So, some specific lines and comments from the finance minister which were made on the 22nd of Feb are on your screen. The FM essentially talking about how this can be an option which can be considered. Also, we had the oil minister talk about this. This was a day later on the 23rd of Feb. And the oil minister also essentially at that point said that from day one, I've been urging the GST Council to bring petroleum under GST purview. And then we had the RBI MPC minutes on the same day on the 23rd of Feb, not directly saying that auto fuel should be part of GST, but basically saying that, we will need proactive supply side measures, also coordinated action by centre and states to contain the high indirect taxes on petrol and diesel. So maybe an indirect reference to what we are talking about. Now, is this GST push for petrol and diesel real? Is it going to happen anytime soon? We have Dr. Soumya Kanti Ghosh, Group Chief Economic Advisor at State Bank of India, joining us right now. Dr. Ghosh has written a very interesting report. Using various assumptions, he's essentially quantified what could be, what will the numbers look like. The big concern, of course, is that giving up petrol and diesel in terms of the right to collect taxes is giving up control on a lot of, the revenue loss is not that large. The advantages are more. Can you take us through the crux of the report?
Yeah, thank you, Prashant. I think the issue of oil getting under GST has been for a while for both the center and the states, but I think both of them, the center and the states, both have a problem of fiscal uncertainty, because this revenue gives the center and the states both the options of revenue mobilization in uncertain times. This has been proved time and again, as you saw during the pandemic. Now, the question is, if we get GST under oil, GST for petrol and diesel, the issue is that we already have migrated to a GST structure where even one nation, one tax. But if you look into the taxes on oil, that is actually different across 30 states in India. That is different for the center. And even in a state like Maharashtra, we have two taxation structure, one for the Mumbai and Navi Mumbai. So in effect, we have around 31 tax structures for oil in the country. And interestingly, the pricing mechanism and the taxing mechanism of oil is the same mostly across the globally, because oil is always a commodity which is easy to tax. Having said that, I think we actually did a lot of simulations to understand what could be the possible revenue implications if diesel and petrol are ultimately brought under the ambit of GST. We actually assuming that the current prices of crude is at 60, and we also made provision that the price could go up to 75 or it could come down to even 20. And on the 60, assuming an extended the current level, which is around 73, 73.5, we estimated that if the GST at the highest rate, which is 14% for the center and 14% for the states, along with an cess of 30 rupees on petrol and 20 rupees on diesel, which again being equally divided across the center and the states, could result in petrol prices at 75 rupees and diesel prices at 68 rupees. And that actually could lead to a loss of revenue of around 0.4% of GDP. That means around 1 lakh crores for the center and the states. Of course, the loss is more for the center than the states. But the important point over here also is that we have also taken into consideration some amount of volume gain once the price is cut. But on average, the total revenue loss could be 0.4, and it could go up to 0.5% of GDP, including center and the states, if we move along this direction.
Okay, so those are the key numbers, that the loss to the center would be about 0.5%, 0.4 to 0.5% of the GDP. And petrol prices could come down from 95, 97 that it is currently down to 60, I think 75 rupees per litre. Dr. Ghosh, morning. Do you think it's possible, though, to bring, petroleum under the GST ambit? Given the complexity of the issue, the difficulty in arriving at a consensus, do you think it's possible? And is the time right to bring it right now under the GST ambit?
Thank you. I think that's a very interesting question whether the timing is right. I will answer the second part first before I get into the first part. I think if you ask me for a timing on these oil prices, I think no time is right because it's a commodity which always gives operational flexibility to taxing, and this we have seen. But the important point is that in this year's budget, it has been exclusively said that the center is going to consider a fiscal deficit of around 4.5%, and that too will be in the year of 2025-26. And also there are now, given the revenue receipts collections which were shown in the last one, there is now large possibility that the fiscal deficit estimates for the current year would be undershot when the numbers are announced in May. So, if I take these two factors into consideration, given that right now everybody is talking about growth as the first priority, and fiscal consolidation or fiscal austerity for that matter may have been pushed into a background for the next 3 to 4 years. Of course, we'll get down on the fiscal consolidation path. So I think right now the time is just maybe right to push oil under GST. Obviously, it will result in a revenue loss, but 0.4 to 0.5% of GDP, if the government says that we are fine with it, that could bring about a lot of enormous benefits also for the country. But one point I would like to say over here is that the point is that this will answer your first question, whether it could be at all brought under GST. We should also remember that if oil is brought under GST, there will be demand for input tax rebate, which is around 20 to 25,000 crore. So that is another revenue implications. So the best possible option could be get oil under GST, and may not look into that input tax provision, because that could result in another 0.15 to 0.2% of revenue loss, because that's a big amount in terms of the input tax credit.
75 rupees for a litre of petrol sounds good, doesn't it? I mean, from 90 right now at the pump in Mumbai.
97.
97. Okay,
Yes.
it's been a while since I got petrol. But Dr. Ghosh, two questions, right? Politically, why would the government do it? I mean, it's a little bit about control as well, right? I mean, right now the government, if it so chooses, can bring down excise, give relief to consumers, right? That is one. Second, gas is a much more easier thing to do, much less opposition. That still hasn't been tackled. Isn't this a much tougher sort of nut to crack in that sense?
No, I think it's a very tough nut to crack. So that's why in our piece, we have also given the operational flexibility to the government that they could keep the prices at the same level once it is fixed. So it could be 75 this year, it could be 80 next year, it could be 70 some year. But so if the crude prices go up and down, the government also gets some revenue loss or revenue benefit, which they decide not to pass on. And that could be built up in terms of an oil price fund, which could be used to compensate the center and the states if it is required. So that's one of the options. The second option regarding the gas, yes, I think that is also a difficult option, because there has been an increase in prices over there. There is also some suggestions we have made in the report whereby the government can consider subsidizing the poorer segment in the society in terms of gas pricing. But to me, at the end of the day, I think maybe at some point of time, we need to move towards a pricing regime which is consistent across the states and the center. We appreciate that there is a lot of operational difficulties in doing that, because that is the only commodity for the states, one of the few commodities of the states with the states of freedom. So the states and the center has to sit together. But at the end of the day, I think if it has to be done now, I think this is maybe perhaps the best time, because we have pushed the fiscal consolidation path to 2025-26. And by that time, I hope things will recover much better than what they are currently.
Dr. Ghosh, thank you very much for joining in. In FM's own words, this is a vexatious issue. So let's see how it plays out. We'll slip into a short break on that note. On the other side, more on the market. Stay tuned.